Doug is, in my mind, one of the foremost thinkers on what really drives economies, and in particular what drives the economies of the future, not necessarily looking at the past. Doug is the CEO of Collaborative Economics and does work both locally, nationally, and around the world, helping governments, not-for-profit institutions, regional leaders think about how to make their economies work better. And we'll talk about that more generally, but more specifically, Doug's here to talk about an upcoming first ever California Economic Summit that will be held next month, and we'll get into that a little bit more. And Doug is the brainchild of that and doing all the work helping to make that happen, and we look forward to hearing from him about what we should be thinking about California's economic future and how the summit fits in that. Give us a little bit of how you got to being Doug Henton, the guru of economics.
Well, first, Lenny, thanks so much. I've had a chance to come to these before, and it's been a pleasure, and it's great to be here, to be able to speak a little bit. And amongst the friends, some other folks I know here very well, and others I've never met before, so we'll have a good conversation. It's interesting. One thing that people don't know about me is that I grew up on a farm in Kentucky. And I feel very strongly about the importance of place and the importance of roots and stewardship. And you really have a responsibility for the place that you grew up in. And I still feel strongly about that. And then the next thing is community. And I care a lot about community, the fact that you can't have a strong economy without a strong community. So I was very fortunate in being able to get a good education, and I went to Yale, and I was able to go off, learn a little bit about the rest of the world, and then I upset my mother terribly, and I went to graduate school at Berkeley. She could never figure that out. She wanted me to go to law school, and I said, no, Mom, I want to go to Berkeley. That was really interesting, because I went there during the free speech movement and all of that, but it was very interesting. I learned a lot. And so I love California. Anybody that's ever come to California, and you guys know, once you're here, you love it. So, but then I was able to go to a program there that taught me a bunch of things about economics. I studied economics in undergraduate and economics in graduate school and political science, because I always felt you had to put the two together. You couldn't study economics without understanding politics. I've never understood why they got separated. In the old days, they used to call it political economy, but somehow they're separated now. I think they go together. I was fortunate enough to go to Washington, D.C. Nixon just left, Watergate, into Vietnam, a lot of uncertainty. A new president came in trying to think about the future, Jimmy Carter, and he said, we wanted a government as good as our people. So I believe that. So I was there in that period from 75 to 79, and what was interesting about that time period, a lot of things happened. Number one, we had our first major energy crisis, and it hit us, blowed us over. And we had the oil embargoes. We had the price of oil going up. I don't know, you probably remember, we're standing in line waiting for gasoline. Well, it had more of an impact than that. It really changed everything. I can tell you, when I was getting out of school, I didn't even think about business. I thought, business is going to take care of itself. All of a sudden, you couldn't assume that business was going to take care of itself. The economy became more and more important in that time period. We had inflation. We had unemployment. We had stagflation. People trying to figure out what to do. So that led to my interest in the economy. So what happened next was I went to, I was able to come back to California, which is great. I was ready to leave Washington in 1979 for a variety of reasons, but it was a good time to leave. So I came back and I went to work at Stanford Research Institute, SRI, down in Menlo Park. And so we decided, I want to tell you this quick story because it's important. I read a book, and it was an interesting book. And it was written by a journalist from the Washington Post. It was called The 9 Nations of North America. And it basically said that the United States is not a single nation. It is made up of regions. And you have to think about it that way. The Southwest is different than the Northwest. You have to break it up into regions. And it struck me as that's the key. And so we started a program at SRI that focused on regional economies. And so we started working on the Midwest when they started going through the industrial decline. We worked on the South, we worked on the East, we worked on the West, we worked on every region of the country. I worked in 40 states. And guess what happened? At the end of that period, who got in trouble? California. And in the 1990s, we got hit, as I'll get to in a second. California is a great economy, but every once in a while we get hit. And we got hit by an interesting experience that happened to us, which was essentially the end of the Cold War. California's economy was so dependent upon defense spending in the 80s. And when the Berlin Wall fell down, here's what happened. The defense budget was cut by 1/3. And California lost 200,000 jobs in 1989. If you lived in Southern California, you were looking for jobs. And so we were not immune to that. Here in Silicon Valley, everybody thought, oh, we're just going to roll on forever. We lost 100,000 jobs. Lockheed was our #1 employer. We lost a lot of jobs. And so people said, what's the future of Silicon Valley? Silicon Valley's finished. We're finished. We're never going to come back. And so we were asked to help put something together, which became an effort called Joint Venture Silicon Valley, where we got all the cities of this region, which are essentially not just individual cities, but all 27 cities, all the major companies. Applied Materials was one of the big players with Hewlett Packard, Intel, you name it, foundations, universities together, and we formed a nonprofit organization called Joint Venture Silicon Valley. We said, we got to take responsibility for our own place, our stewardship. And so we created this organization. I was asked to help do that. So we created this, and it's been around for about 15 years, and we continue to do the index. Now you might ask, why would a place like Silicon Valley have to take care of itself? And the answer is obvious. If you don't do this in a competitive global economy, you will fall behind. We have to invest in ourselves. We have to invest in our education. We have to invest in our infrastructure. And we weren't doing that. So joint venture was set up to do that. And so what happened next is where we are today. I was so fortunate to meet someone who I would consider to be a mentor. And that was Becky Morgan, who was the state senator from the region. She resigned from the Senate to become the president of Joint Venture Silicon Valley. And so we worked together for 15 years. We have done something, which is where we are today. We are now working in 14 regions of California, not just Silicon Valley. We're trying to help every region of California come together to figure out its own future and try to figure out how to make California a better place. That's what the California Economic Summit's all about. And it's really an effort to try to take responsibility for our own futures in the fact that we have to do this region by region. And that's the bottom line. California is not an economy. California is a political jurisdiction. Somebody decided years ago to draw a map, put lines on a map. California is a series of economic regions. Silicon Valley, San Diego, the Central Valley, LA, the Inland Empire, the Redwood Coast, they all have their own economies. So we have to figure out how every economic region does its work and then tie them together so that we can move forward as a state. That's what we have to do. And the final thing I'll say is I've learned is that California's economy is not Sacramento. We get so confused about this, and I'll talk about this. We have a budget deficit. We have a state government that's not functioning. But we also have an incredible economy. We have an incredible set of resources. So we have to make a distinction between our economy and our political institutions, which are weak right now. And if we don't have strong political institutions, we won't have a strong economy. But I'll make that distinction. So here at the California Economic Summit, and it's going to happen on May 11th, and I've just finished, believe it or not, touring the state, going to 14 regions. I think we've gone through the worst recession since the Great Depression. We've had 11% unemployment. People are very discouraged, and there's every reason to be discouraged when you look at the macro picture. But when you look at the micro picture, you'll see industries growing. The Bay Area is starting to add jobs back. There's jobs growing in LA. We got hit by construction destruction. We lost 700,000 jobs in the construction industry because the housing bubble collapsed, because of the subprime mortgage fiasco. That's the reality. And we're going to build our way back if we build it industry by industry, region by region. And that's why we call the summit Can Do California. And the reason we call it that is that we have been spending so much time telling ourselves what we can't do. And it's now time to talk about what we can do. And that may be aspirational, but I got to tell you, there are people all over this state that are ready to talk about that. And we need to pull them together. And that's what the summit's about.
The United States has 9 different regions. California has 14 different sub-regions within that. And you've had a chance now, so there were 14 regional summits leading up to this California summit. So what did you learn as you went across those 14 different regions? Is it all the same? They have the same issues? They have very different issues? Well, what did you learn?
There's a fantastic website California Forward, which Lenny is on the leadership group, is one of our partners in this, has put up a website called caeconomy.org. Cut it two ways, okay? By industry. Every region is different. So last week I was in the Central Valley, and all they really were focusing on was the agricultural value chain. It's the breadbasket. They produce agriculture, but then you move down the chain. Distribution, logistics, processing. What do they have to have for water? That's what they worry about in the Central Valley. But when you go up to the North Coast, different industries, not just forest products, but other industries that are important to them, including especially manufacturing. When you go to Sacramento region, not just the city, although you say government, the 8-county region, it's not just about state government, it's about healthcare. It's a big industry up there. Or you look at industries that are emerging around Davis, which is really a fascinating technology centered in itself, agricultural technology. Then you go to the Inland Empire, and you say, what could be happening in the Inland Empire? They just lost more jobs than any other region. What's going on? Well, I'll tell you what's happening in Riverside and San Bernardino County. It's a logistics hub. Los Angeles and the Port of Los Angeles and the Port of Long Beach, which, by the way, are doing quite well right now. Exports are coming back, and the trade is going up. They all go out through Riverside and San Bernardino County, and there's an incredible logistics industry and a whole set of goods movements activities out there. So first of all, you look at it by industry. Here in Silicon Valley, sure, we have technology industries, we have professional services and all the rest. San Diego has biotechnology. So first you look at it by industry, and it's different, but then you look at it another way. You cut it by what's important. And it's fascinating how similar they are. So we went out and asked everybody, what are the most important issues? And we use electronic voting. So we get 200 people together and we say, what are the most important issues? And they vote. And here's what they told us. And I'm not going to surprise you, but this is what they told us. Workforce. We have to prepare a skilled workforce, and it's not always the highest level skills that we're missing. Middle level skills, community colleges, technical training, workforce investment boards, connecting them to the industries of the future, healthcare, advanced manufacturing. That's not happening. Our community college systems are in shambles. They're our most important asset, I think, right now. Number one. Number two, infrastructure. $765 billion with a B infrastructure deficit in the state. Now, every part of the state's worried about this. How do you finance it? Well, we're not going to finance it just with public sector funding. We're going to have to use new creative financing. Number three is regulations. California, a tough place to do business. We know that. We need to have total customer service. People ought to have a place to go to solve their problems. We have all these cross-cutting regulations and nobody knows how to work through that. Everybody wants to figure the answer to that. And then the final one is innovation. We've got to make sure our universities, which is our great asset, are going to continue to be a great asset in this state and use that to promote technology. And I worry about it.
Those are terrific issues. When you talk to people in regions and ask them what they think about them, do they feel like depressed, these are unsolvable, let's wait for Washington or Sacramento? What's the general mood?
They're not waiting for Washington. Sacramento, a lot of frustration. The government, similar. There's a lot of gridlock, and things are not being decided very well. You go to Sacramento, they have to put on their uniforms. D.R. labor, business, and they can't talk to each other. But when you're at the regional level, something else happens, and it's very interesting at the local level. Well, first of all, most of you probably know that when we elect local officials, it's not partisan. At the regional level, people do tend to want to come together and solve a problem because they have to live with each other. I mean, if they misbehave, everybody knows it. You can't get away with it. More of a sense of solving problems at the level at which it's appropriate to solve the problem. We've gone through this horrible recession, and people have felt really bad, but I think we're at a sort of a critical turning point. I've seen this before, having seen several recessions, that people are starting to see the light at the end of the tunnel. They're starting to see the economy getting a little bit better. They're starting to see an opportunity, and it's time to take some action. We have only one industry in the state that's in trouble, and that's housing and construction. Every other industry is actually growing in the state. So we're not at the bottom, we're actually sort of ready to move up. But we do have an overlay, quite frankly, and we can get into that. The federal government and the state government is not helping right now.
If that's the environment where you feel like the general economy is recovering, there's a sense of regions can help each other, but we've got this thing called Sacramento that's not helping. So how do we work through that, and what's the summit's role in trying to help that?
I had an opportunity 10 years ago to help organize the Oregon Economic Summit. They brought together their business community, their environmental community, their labor community, and they started coming together on an annual basis to try to take on issues. And the governor and the legislature come to the summit and they deliver a plan called the Oregon Business Plan. And it's been very interesting. The first one was fascinating. Both gubernatorial candidates in 2001 agreed that they would participate in the Oregon Economic Summit and accept whatever came out. So you can do this, but it requires a certain amount of goodwill. So here's where we are, being very practical about it. We know that there's some giant problems in the state, but we've taken on some specific problems that we think we can find agreement around. So we have a leadership group and a steering committee that's helping us with this. On our leadership group are a bipartisan group of very distinguished California leaders who we think are stewards. Former Secretary of State George Shultz, 92 years old. And we also have, George Shultz, George Shultz probably helped save the world many times, but he helped at the end of the Cold War, so he knows how to do negotiation. Laura Tyson. Laura Tyson was the economic advisor to Bill Clinton. She's advising President Obama. They're on a leadership group, and they've set aside their partisanship, and they're working together to say, let's solve problems for California. Bob Hertzberg, Becky Morgan, Peter Uberroth, Alicia Marcus. We have all these people who want to be on the leadership because they adopt the principle that we've got to find ways to solve problems and get past our partisanship. We're not going to solve every problem, but we're going to find problems that we can solve that are doable. So that's the first step. And then the second step is we have a steering committee, which Lenny chairs, made up of people all over the state who are working hard on this. And we're going to get down to the nitty-gritty. Now that we've finished the regional forums, we're finding cross-cutting issues, we're finding signature initiatives, we're finding issues that we can work on. We're trying to be very pragmatic. And we're inviting all the legislators to be involved and all the rest. And we're inviting the governor to come to the summit and hopefully be part of our process. So we're doing everything we can to engage people on a non-partisan, bipartisan basis. It's hard to do, but there's a reason why. We've gotten good support from a variety of financial sponsors, and it's all 501c3, if you know about foundation world type stuff. It's not advocacy. We have to be very careful. The summit is not about advocating for a ballot initiative. There's other forms for that. It's not about electioneering. There's other forms for that. It's about education, dialogue, and trying to get to a point of deliberation.
Tell me what the summit itself is going to look like.
Well, it's actually going to be it's going to be fun. We're going to have it at the Santa Clara Convention Center, which is a very beautiful, it's a very nice facility. We expect to have about 500 people. The regional teams that have participated in the regional forums are all identifying what we call champions, people that are interested in an initiative. They're coming. California Forward has been providing us with some very interesting digital tools. First of which is the website, which is first class. And the second one is the following. Why can't California, which is the leading technology state in the United States, if not the world, use our own technology to help solve some of our problems? There's a tool called CrowdBright. Imagine for a second, 500 people in a room, sitting around 50 tables, all working together on key problems, using a technology that allows them to project their ideas on a screen and solve problems at the same time. We're going to use that technology, and we're going to do something that no one's ever done before. We're going to try to be able to model not only consensus building, but using some of the tools that we all know we can use to solve problems.
Doug Henton just got elected governor of California. It was the first person since Earl Warren to be nominated by both parties, and by acclamation, you're in charge. So what would you do?
I would resign. I was a consultant to something called the California Economic Strategy Panel, which was appointed by governors. And I've had an opportunity to work with governors. Wilson, Beijing, Schwarzenegger, Davis, and even Jerry Brown. I know who these people are. I think sometimes we put too much faith in an individual. I mean, the problems confronting California are so complex that you can't expect a governor to solve all of them for you. And the analogy that I like to use is what happened to the computer. If you remember where we were 20, 30 years ago, everything went through a single mainframe. Remember those big things we used to have off of a wall somewhere with an IBM computer? Now we all have PCs. Now we have tablets. I think we got to move in that direction. I think we got to solve problems at a sort of lower level and sort of solve them all, and then let them sort of work their way up, and not have the governor have to make all the decisions. I think what happened to California is that we've put so many decisions up to the legislature. We've put so many things up to the governor that we're asking the governor to solve all these problems, balance the budget, figure out taxes, figure out how to do all this stuff, that it's almost impossible. And I really think it's like we've got to figure out how to reduce some of those decisions down to a level where people can actually solve their own problems, and then bring the big ones, and they are big ones, up to the governor. And I would say this, you mentioned Earl Warren. We've had some great governors, and I would go back to Earl Warren. I mean, Earl Warren, in fact, was nominated by both the Democrat and Republican Party. And after World War II, he did something spectacular, and I don't think people know this. California today would not exist the way it is today, except for World War II. Before World War II, we were sort of an average state. But after World War II, we had all the people come here, we had these technology companies, we really grew out of our businesses like defense industry. We became a whole new state after the Second World War. Well, Earl Warren did something very interesting. All this money started flowing into the state from federal resources and all this stuff. And he said, look, I'm going to put it in a reserve fund. And that money was what was used to build our schools, to begin building our water systems. And we still have schools that were built in the 40s and 50s because of the money that we set aside, because we invested in the future. And all through the 40s, 50s, and 60s, we invested in the future. When people talk about California, they talk about our water systems, our highways, our University of California. We invested in the future. We've had good governors, like Earl Warren, and somehow we decided to quit investing in ourselves. And I can explain why I think that. I have my own opinion why I think that's true. But you have to invest if you're going to be able to compete. Because let me tell you this, I've been to China, I've worked in China, I've worked all over the world. They're doing it. If you read Tom Friedman, he's exactly right. We forgot what made us great, which was investing in education, investing in research, investing in infrastructure. We've got to get it back. Because you know what's interesting? California invented that model.
That's a great answer. So Governor Henton dissolves the state and gives it back to Governor
Well,
Warren.
I do have one little piece of historic trivia. A piece of legislation was passed in the 1850s to divide California up, north and south. You can check out the history of this. They sent the legislation to Abraham Lincoln. And this is during the Civil War. And he said, uh-oh, if we give a Northern California and a Southern California, who's going to get the gold? Because we need the gold to pay for the Civil War. So being the good president he was, he took that piece of legislation from California, just stuck it in his desk and never did anything with it.
That's a great piece of history.
As governor, what are the 2 or 3 or 4 doable high leverage initiatives that you hope come to your level?
We're trying to be faithful to the process, and Lenny has been careful with us, but he gave us a concept, from the very beginning. He calls them signature initiatives. There's a lot of ideas percolating around out there, but some ideas sort of rise to the surface. They're enough of importance that regions all agree on them, and they're ready to go. I think our critical point right there, as I said before, is at the community colleges. I'm a big fan of community colleges. I think we have had great community colleges in California, but we treated them as a transfer function primarily, where people would go for 2 years and transfer to CSU or UC. Great. But our community colleges play another very important role. They're the second chance place. For somebody that didn't necessarily have a chance to finish high school, or they want to get a second degree, or they may even have a BA, they want to go back and get a skill, our community colleges play a very, very important role, whether it's in healthcare skills, whether it's in IT skills, whether it's in an area like the green economy. So I believe that the one thing we can do right now is to put all of our efforts into that piece and fixing our community colleges and making them as connected industry, make sure that they're funded and that people have the opportunity to do what they can do. Now, I'll give you one specific policy change which I would recommend. Now, for some reason which doesn't quite compute with me, we treat our community colleges as if they were K through 12, so they get reimbursed in terms of how many people sit in a seat. When in fact, we should be paying them for the type of skills that they're generating. So if there's a demand in a certain area, industry ought to be able to help, and they do that. Like some of our colleges, we're lucky in the Bay Area, they have customized education. So if you have a new area, industry ought to be able to be a partnership, and they do that. They should pay more. So it doesn't have to just be the state government, paying as if nursing is the same thing as auto mechanics. Nothing against auto mechanics, but it costs a lot more to train a nurse. But that's one of the reasons why we don't have enough nursing training, because they don't reimburse them. So that's a very specific area. It's ripe, ready to go. We should do something in that area, and there's a general consensus in that area. We have this enormous infrastructure deficit. So how do you crawl out of that? I don't think it's a question of just passing a whole bunch of bond issues, and public sector can't solve that only. But last week, there was a very interesting announcement. The city of Chicago announced a program to raise $9 billion of money to pay for their infrastructure using a social trust fund. There's a public-private partnership where the private sector and the public sector are working together to solve problems. Mayor Daley, Richard Daley, the second Daley, was here at the joint venture event, and he said, everything we do in Chicago is some type of public-private partnership.
Democracies are not really good at substituting short-term pain for long-term return. Is it more likely for that to happen on a regional basis?
We're not making long-term investments. You just look at the data. Short-termism, we tend to look at quarter to quarter. In elected officials, they look at election to election. And so people don't have a long-term perspective. So we do need mechanisms that allow us to do that. Santa Clara County has passed, over the last 15 years, enormous number of sales tax initiatives to tax themselves for transportation. Every time the Silicon Valley Leadership Group and the California and the Central Labor Council, everybody gets together and said, we have to do something to pay for our transportation. The citizens of Santa Clara County have voted yes, 2/3. And that's one of the reasons where they're getting barked, because they've actually funded themselves. If a region is willing to do self-help, then the state transportation budget, which is created at a state level, out of fuel tax funds and all that, ought to reward regions that do more. So I think it's possible if you develop a regional collaboration. Now, it doesn't always work that way, but I've seen examples of it. Let me give you an extreme example, because I've worked outside of California. Oklahoma City. I don't know if anybody's been to Oklahoma City lately, but it is a revived community. It is unbelievable. Low unemployment, a great downtown, wonderful things happening. And how did they do that? United Airlines was thinking about expanding, and they looked at Indianapolis and Oklahoma City, and they went to Indianapolis and they told the people in Oklahoma City, we don't want to come there because we don't like your town. You don't have a good downtown, you have terrible schools. Basically, they just sort of slapped them up the side of the head. So Oklahoma City decided they were going to do something about it. So actually, over the last 15 years, they created something called the MAPS program, the Municipal Assistance Program. They raised their sales tax, they fixed up their downtown, they improved their schools every time using their own money. And now, today, Oklahoma City is considered by many one of the revitalization cities of the United States.
Our schools are clearly a major issue. Is there a solution that's clear that you think people can get behind? And is that at least one piece of it, or is there some other way we can get funding?
In 1978, California ranked 7th in the nation in per capita spending on schools. Iowa's always up there for some reason. I mean, they spend money like crazy, but California was really one of the top. Today, we're about 48th, 49th. And it hurts us in a variety of ways. The other side of the coin is we are rapidly changing in our demographic mix in the state. We are essentially a state where everyone is minority. We have an incredible mix of languages. Half the households in Silicon Valley speak a language other than English in their home. We have a diverse population, we have a declining spending, and we have another problem, which is that the skills mix that we need to be competitive requires higher and higher levels of skills. And so we're not training for that. So here's how we solve the problem. It's not a good solution. In fact, it's the wrong solution, for my opinion. If you look at the statistics, and we do measure them every year, in the index of Silicon Valley, and odd things happens. We have high dropout rates. We have our performance in our schools are not great, but our educational level continues to go up. We have one of the highest levels of people with BAs and MAs and PhDs of anywhere in the United States. How does that happen? Because they come here from everywhere else.
Immigrants.
And not just immigrants, but people from Pittsburgh. I mean, when you graduate from Carnegie Mellon, the first thing you do is get on a plane to come to work for Google. I mean, how do we solve the problem? Difficult. First of all, I do think we need more money in the schools. No question. There's this giant debate that money and reform. I don't think you just do it with reform, but you need to sort of change the performance of schools and invest at the same time. Sometimes it's an either or. People say, oh, we have to fix the schools, and then we'll give them money. No, you do both. There's no reason why you can't do both. You invest and reform at the same time. Now, your Prop 13 question. It is the third rail, and in polite company, you can't talk about it. People go crazy. And here's why. It was a very, very destructive piece of public policy because it is an entitlement. I think the solution, I told Lenny I didn't want to get into this, but I will. We need fundamental tax reform. We need a broader tax base. We're trying to operate a 21st century economy on a 19th century tax system. We tax sales tax. We tax goods, not services. And we know that 80% of our economy is services. So what's happened is our sales tax base is eroded. It used to be half of our state income, state tax. Now it's 1/3. Well, the reality is that California has one of the most progressive income taxes in the United States. And here's what it does. Every time we go into a boom, which we do, like we did with the dot-com boom, it accelerates. And all of a sudden, all this money comes into the state. Oh, they feel so good. They have all this money, and they spend it all. And then the next thing that happens is we go into a bust. And then it all goes away. The income tax is the most volatile tax. Because why? All these people like Larry Ellison and all these people, they cash in their stock options and it all shows up in the state budget. It's going to happen again. When Facebook goes IPO, all this money's going to come in and it disappears. So we have a volatile income tax, a narrow sales tax, and a property tax that doesn't work. So no wonder we can't finance anything. So here, what's the solution? You broaden the base. That probably means sales tax on services. You probably have to go to the broadest base possible. You get rid of some exemptions, and you lower the rates. And that's what's called tax reform. And there have been recommendations on the table for this. There was a commission that was set up for the legislature last year. There's a Think Long committee, which I'll talk about, which had George Schultz and Laura Tyson on it, which recommended this. It will come. And I will tell you this, after this election at the federal level, we will probably get some form of tax reform. We actually had this type of reform under Ronald Reagan. I don't know if you remember, but in 1987, Ronald Reagan instituted a federal tax reform which broadened the base, eliminated exemptions, and lowered the rates. It's possible. We need tax reform. That's the only way you can do it. Then you have a tax system that will rise with the economy and pay for these services. And we don't have that now. And we're all locked up and, we have to raise rates. Well, if you just raise rates, that doesn't solve the problem. If you haven't expanded the base has to rise with the economy. So to answer your question, yes, we don't have enough money going to education. We need to solve the problem. It's probably going to require tax reform. But I don't think we're going to change Prop 13 anytime soon, unfortunately, because I think probably most people in here that own a home would probably lynch the person who said get rid of Prop 13. It's just a third rail. It just is. Howard Jarvis smiles in his grave what he did to us. It's incredible. He really locked us in on this one. He also gave us, quite frankly, he also gave us the 2/3 rule.
Yeah.
Think about this. You can't pass a tax in California in the legislature without 2/3. In principle, that sounds like a good idea. You couldn't get 2/3 to agree on anything. The sky is blue. I thought we lived in a democracy. 51%. That's what we got.
I really worry about the long-standing recession and the impact that has had on people's psyche, whether it's education or roads or water infrastructure or work in water. I just really worry about our long-term ability to sustain ourselves when we're anti-government, we're privatizing everything.
The drift that we've been in for the last 20 years, that you can do everything through the private sector, there's no role for government, it doesn't make sense. I mean, there are two thoughts on this that always strikes me. First of all, most conservatives did not actually read Adam Smith's Wealth of Nations. First of all, it's not called the wealth of individuals. It's called the wealth of nations. Okay, that's an important point. Second thing, he only used the word laissez-faire once in the entire book. Once. That's not what it's about. What it's about is people coming together in a market economy to create wealth for everyone. Now, Adam Smith did not like corporations. No, he called them monopolies. So Adam Smith really believed that you need to have government, believe it or not. One of the things that Adam Smith believed in was he says we need to have public infrastructure. We need to have facilities that government can only pay for. And then the biggest thing about Adam Smith is that he wrote a second book. Actually, it was his first book. It's my favorite. It's called Theory of Moral Sentiments. And what it said was that for any economy to operate, it needs a foundation of moral principles. And the moral principles were that you have to care for your fellow man. If you don't care, that's what he called it sympathy. And actually what we call empathy. And he says without those foundations, a market economy will go off the rails. I think we've seen that. We need efficient and effective government. And I think that's where people go wrong. They equate government with bureaucracy. And they say, oh, bureaucracy, you can't get anything done. I don't like bureaucracy either. I mean, I don't like to go to the DMV and stand in line. But a good friend of ours, probably most of you, Sonny McPeak, was the head of the Business, Transportation, and Housing, and others. They did everything they could to try to modernize the DMV. I think you can do more with the internet now. You can do things differently. I mean, we can make it better. But we just sort of say, oh, government's all bad. I don't buy that.
What role does trust come into this whole equation? How do you engender trust with people with very different viewpoints?
Well, I think it's critical, and I think in principle we know it's important. But also there's been a lot of research on this. Relationships, human relationships and networks are what make the world go around. It's not all about transactions. And if you just simply think about it in terms of transactions, you just sort of shake hands with somebody and never see them again. If you really want to build a business, if you really want to build a community, you have to build trust. And if you don't have trust, people don't want to do business with you. And that's the thing with this financial crisis I still don't understand. We used to call these things banks and trust companies. I don't know where that went away. But when I grew up, maybe not that old, but my father was on a bank board, and a small town bank, and you go in and you shake hands with the banker and you tell them, I'm going to pay my loan back. And you do, right? There's no this fooling around with funny loans and risky loans. So I think trust are at the critical moment of how you build communities and how you build economies and how you build governments. And what happens is, this is maybe my own view, the further away you get from communities and regions, and the more up you go up to state or federal, the harder it is to engender trust because people don't know each other. In Washington, they don't know each other. They don't have any trust. They basically despise each other. But when you're at the community level, I believe that you can build trust because people get to know each other. And again, if you misbehave, people know it. And you're not going to get away with it for a long time. So I think you put your finger on it. To me, trust is absolutely essential to build a relationship, whether it's a business, whether it's trying to build an institution or the rest. Now, California is a big state. And part of our problem is that we're so spread out and we're so complex. That's one of the reasons why we're trying to do this region by region, community, to try to rebuild trust and stewardship at a level that people can actually operate. And that's, so I agree with you, trust is absolutely sort of central.
What you expect to do with whatever comes out of the summit?
Right. So you don't stop. The summit is not the end, it's the beginning. And so it's a way of building momentum. And so right now, at this moment, we've identified some initiatives that we think are likely initiatives. And we're building what we call action teams. People all across the state. And they're saying, okay, we're interested in this, we're interested in that. We're already starting to build our ideas as we go to the summit. When we go to the summit, we want them to talk them up, ratify them, and then keep going. But there will be specific outcomes. But we're trying to figure out those few things that we can do that would begin to move things forward. And then hopefully, if this becomes an ongoing process like in Oregon, you keep coming back to it.
Now, Oregon, when they come, it's an annual event. It's 75% of it is reporting back on progress and holding people accountable for what happened. And the governor, both senators, the heads of the Senate and the House all show up and report on what they're accomplishing that everyone is trying to hold them accountable for. So, we're a long ways away from institutionalizing it that way, but it's an attempt. Now, as Doug said, Oregon could fit in the Half Moon Bay Brewing Company. So it's not as complex as California, but it's at least an attempt.
And they do tend to get along up there if you know Oregon people, but it's tricky. I've worked a lot in Oregon over the years, and they seem to get along. But when you really get to know them, they have their disagreements too.
Yeah, they agree on one thing. They are glad to be out of California.
There you go.
That's their first.
I'm interested in your opinion on, or the lack of paying taxes, the buying goods and services over the internet has had on our economies.
I have a strong opinion on that, but my wife works for an IT association. We have to be very careful of this. I see no reason why we shouldn't tax all things the same. I know the argument that said, well, the internet's starting, it's an infant industry, we gotta make sure they have a, break, okay? I don't think Amazon is an infant industry. I mean, Amazon is a big business, and so I think they have to pay taxes like everybody else. Now, question is, how do they collect them? Well, I think they can. The sales tax that we lose because we don't collect those at the state level, at the local level, is significant, and it forces us to be even more reliant on the income tax, and the income tax is so volatile, so it has a distortion effect as well as having an impact and I'm not sure it advantages any jurisdiction. It might advantage the company, but I don't know if it advantages any jurisdiction to provide a tax break, and I'm not a big fan. You can go read my stuff. I'm not a big fan of tax breaks. I don't think that the purpose of economic development is to give a company a tax break. I mean, every company would love to have a tax break, but I would say that that's not what drives them. What drives them, I'll give you an example. Years ago, Genentech, which is very famous here, I was involved in some decisions, and they came to me and said, every state in the union is trying to get us to expand in their state. They're offering us this, they're offering us that, free land, free taxes, blah, blah, blah. They decided to expand their operation in Vacaville. And the reason they said they decided to expand their operation at Vacaville was that the Solano Community College was training biotechnology technicians. And what are they going to do with the tax break if they can't find trained workers? Intel decided to go to New Mexico years ago. And no, fine, they can go to New Mexico, they can go to Arizona. I understand they expand. So New Mexico said, we're going to give you all this tax break. What happened? Intel shows up in Rancho Rio, and what they found was there was no education system. So they had to spend millions and millions of dollars to pay for public services that didn't exist because they gave away a tax break. So that's a loser's game as far as I'm concerned. What you have to do is build your infrastructure, provide people with the best skills, and then companies will make the right decision about where they want to locate. But giving away tax breaks, not mine.
Is there any kind of benchmark ability to compare the amount of money California takes in versus other states don't have income tax and so on? What is the return and how well do we do?
Yeah, that's an important question, and there are ways to measure that. The thing to remember is that there are, again, multiple tax systems. So people love to compare California to Texas. Obvious example. People say, "Oh, Texas, no income tax." Okay. Property taxes in Texas are much higher than they are in California. Sales taxes are about the same. So when you line up the tax system in Texas and California, not that much different, really, on a per capita basis. So you have to look at the entire tax system. And if you look at other states, Nevada can offer a little less income tax than California. But you have to ask the question, what type of public services are they offering you in Las Vegas or Reno? And Nevada was not exempt, quite frankly, from the housing bubble blow up. In fact, Nevada's unemployment rate is higher than California. So I don't think that's the only factor, but it is a factor if it gets too high. Now I agree. I mean, if we were to raise our income taxes way up there, people would float away from the state. We need a more balanced tax system across the board with a broad base. So this is a problem, and I think you raised a question, but I think you have to look at the entire tax structure. And on that basis, you can look it up. The Tax Foundation does all these studies, and you can look at it. And it depends on the tax. It depends on the region. We are a relatively high tax state compared to, let's say, Mississippi, but we are in the average, not at the top. So we're sort of in the mid-range, up in the higher level. New York maybe ranks a little bit higher overall than us, and they're trying to reform their taxes. So it's always something to look out for. But I don't think that that's the only reason companies and people go other places. It's not the only reason they go to Oregon. They go to Oregon because they like to live there. And that's fine. One of the things that really drives people, I think, is lifestyle. People choose to go where they want to live. If they want to live in Oregon, that's fine.
The average answer is California's in the about the top third in terms of total tax burden per person, right? It's not, we're not at the top, we're not at the bottom.
We're not at the bottom, that's for sure. But we're not at the top. It was interesting. Don was at the thing this afternoon with Jerry Hill, our Assemblyman. I thought it was interesting. He started off by saying, "Let me just put some facts on the table," and it was pretty interesting. And we could check to make sure they were true. But he said, people think that we have the highest taxes. He said we don't pay any more on a per person basis today than Ronald Reagan was governor. People think we are spending money out. The state of California spends money, and it continues to grow. We're not spending any more per person on an income basis than when Ronald Reagan was governor in the 80s, or 70s, I guess. But I don't think it's true to say that every dollar we spend is wasted or stuff like that. I don't think that's true. I think we get a return in some areas, and we waste it in other areas. For instance, my own personal preference, I would spend more money in higher education than for prisons. California spends more for prisons than for higher education. And you might ask, how? Okay, look at our friendly state, Texas. Texas adopted a policy about 10 years ago called diversion. And what they do is that the people that go to prison that have drug problems or other mental health problems get diverted out of their prison system and are given health treatment. So they don't warehouse people that don't have crime problems in their prisons, so that you can reduce the price of prisons. Well, why don't we do that? We don't have to spend all this money warehousing people in prisons, but that's what we do. So I would suggest that we could do a better job with the allocation of our resources based on our priorities. We need prisons. Lord knows we need the most criminal people need to be in prisons. But a lot of people in prisons probably don't need to be in prisons. And the fact that we spend more money in this state on prisons than higher education bothers me. So it's the allocation of resources as much as how much we spend.
Most people who look at comparisons across states, California is among the least effective at spending what we do, and not very effective at all investing in the way that Doug was talking about, particularly relative to our history and relative to what California's advantages are. So we, at some level, are in this vicious cycle of sense that money's being wasted, we're not investing, therefore we should spend less, and what we're doing is not investing as opposed to not spending. And so there's a challenge to try and change that dynamic.
Can you give us an idea of the burdens, not just tax, but other costs of California, and what perhaps the economic summit might help in getting more companies built in California?
It is true that businesses in this state have a heavy regulatory burden, and they do have a heavy tax burden. It's just a fact. And I think one of the things the summit will try to address is trying to figure out how to deal with regulatory issues that are a burden. And there are ways to do that. Permit streamlining, helping companies figure out how to work their way through the regulatory maze, red carpet treatment where they can always find out their solution. So I think there's a lot we can do on regulations. In some states and some regions and some cities have done that. San Jose has done a good job. They have a single permitting process. Actually, Silicon Valley, under joint venture, created an online internet system to solve regulatory and permitting processes. I think you can deal with that, and I think we can deal with regulatory issues. On the tax side for corporations, I would just say flat out, I don't believe in the corporate income tax. It makes no sense at all. The corporate income tax is a fiction. There's only personal income tax, and either one way or the other, the corporate income tax either goes to the employee or to the shareholder. There's no such thing. So I'm not so sure that it makes sense to have a corporate income tax at all. I think we ought to have something more like a value-added tax or something like that. But I think it is strange that we somehow think, and quite frankly, most corporations don't pay it, because most corporations figure out a way to get around paying it. So it's a fiction. So you could say California has a high corporate income tax, but I don't think anybody pays it, because they hire all these lawyers to figure out how to avoid paying it. So what's the point? The reason is they have it as well. Personal income tax, corporate income tax, somehow that's fair. I don't think so. So I would just simply create, again, a broad base, make sure that people pay across the board, lower the rates, make it more competitive, and eliminate some deductions that are in there, and actually create a more competitive tax system. And I think it's possible. We're the only country, well, this is a tough one, but we're the only modern country that I know that doesn't have a value-added tax. And people say, oh my God, you have a value-added tax. What is that? It's just a broad-based sales tax. And now here's what happens, though. It's a fascinating discussion, because I've worked in some states where we actually entered this idea where you get knocked down quick. So here's what happens with the value-added tax. Liberals say it's not fair, because poor people have to pay more of their income in consumption. Not fair. And the conservatives say if you create a value-added tax, which is a hidden tax, the government just wants to spend more money. So liberals hate it, conservatives hate it, and every economist will tell you it's the best tax. So we'll never have it.
It's going to happen when conservatives realize that it is actually regressive, and liberals realize that it's a way to raise taxes, and then it'll happen. So,
how you will begin to improve the efficiency?
First of all, you have to deal with the point about investment versus spending. Okay, we spend a lot of money in government, but I think we need to set aside.
We don't spend it efficiently.
There you go. And I think I go back to the simple idea of a capital budget. First of all, most local governments do have a capital budget. You know, you set aside a certain amount of money for maintenance of roads or long-term investments. You're talking about water districts. Water districts have to have capital budgets because it's a long-term investment. So I think you have to have a capital budget. You need to figure out what do you want to invest in. But in this day and age, it's not just physical capital, it's human capital. Education. So we need to have investments, and we need to set aside a certain amount. Now, if you look at the California budget, back about 20 years ago, a much higher percentage of our budget went into infrastructure investment. I think it was like 25%. Now it's like, I don't know, less than 5%. And we need to shift our spending towards long-term investment. Okay. And the second thing is what's left, the spending side. We need to have clear rules about essentially how you spend the money in terms of delivery systems. And I think that you don't have, this is maybe controversial, and it goes back to the earlier point about privatization. I don't believe in privatization, but I don't think that everything has to be done by a government agency. We need to think differently about how you want to deliver your services, and at the same time reserve the dollars that you want for long-term investment.
Public sector in general and states in particular have an accounting system that's completely different from what generally accepted accounting principles are. There's not an asset side accounting right that differentiates between investments and near-term spending, and so you don't really make that trade-off because there's no way to account for it. And secondly, they don't account for liabilities very well. They discount liabilities based on assumptions that wouldn't hold water, so you really don't have an investment in what you're setting aside to invest properly accounted for. And then secondly, there's not transparency around the performance of the operating activity. And so therefore people think their money's not being spent well because they don't agree with the investment allocation, they don't know how much they've set aside for future liabilities, and they don't know what they're getting for their money. So I think those things all have to be fixed to give confidence that money's being spent well, and it is being spent on the right things. And when that's true, people are prepared to invest their money, like Silicon Valley and Santa Clara County being prepared to invest in infrastructure because they know where it's going and they can have reporting back. That doesn't work today, so we have to fix all of those things. My general view is the good news is it doesn't happen today, because when it does happen, there's enormous opportunity to do it better. So that's part of what we have to do, is put those things in place.
What's the state of illegal immigration? I know it poses challenges to the education system, and that it's one of those ongoing issues that we never seem to be able to wrap our arms around.
I start by making a fundamental distinction between immigration and what we call illegal immigration. I believe that immigration has been the life's blood of the United States, and I'm sure almost everybody here is an immigrant one way or the other. And it creates a dynamic quality, the fact that we're open to the rest of the world, that people can come here and share and be part of us, and wherever they come from. So I think immigration is a very important part of the fabric of who we are, and particularly this region. My friend Steve Levy, who's a great economist, has done great work on this, and he can show you that immigration of all types is a net plus. Because people that have come here, whether, believe it or not, they do tend to pay taxes. They pay sales tax, and some of them actually end up paying service, and they tend to be young, and they're going to pay for us old people. Okay? So immigration actually can be a net plus. As we get older, somebody's got to pick up the tab. So that's the plus. Now the problem is that our legal our immigration system, our way of bringing people in is broken down. And we all know that. So what we ought to have is a system that is like Canada, Australia. They basically have a good system where people come and they're adopted and they're brought into their system. Our system's broken down. So now we have this thing where we have people that are undocumented and illegal, and they fall out. And so they're discriminated against in a variety of ways. They're abused. They don't have documentation, and so essentially people do abuse them and they underpay them. They do a lot of our work. If it was up to me, I would actually do something. No, it's not popular. Comprehensive immigration reform, which again is something that happened in the Reagan administration. Maybe I'm speaking up for Ronald Reagan here. The Simpson-Mazzoli bill in 1987 actually dealt with immigration. It basically said we're going to change the system. We're going to have a system where people that are here are going to have some amnesty, and we're going to basically go into this process recognizing it in a realistic way. It's become polarized. It's become terribly polarized, politicalized. John McCain was in favor of comprehensive immigration reform until he ran for president. Yeah. And then you basically are now able to even have a conversation.
We were originally talking about the economic summit. If people are interested in that, how can they engage in it, and how do we follow what's going on, and then we'll do some closing thoughts.
caeconomy.org. If you go to that website, everything you need to know about the summit is there, and you can follow the progress of, we're pretty much closing up the regional forums. The last one's tomorrow in Shasta. Luckily I'm not going. I love Shasta, but I'm not going. But we've had 14, and now we're preparing for the summit on May 11th. So I hope that you'll be involved in your communities and get involved in solutions. Some of these ideas are going to come out that I know if you're interested in some of these issues, they're going to be things that you can be involved in. I guess the final thing I want to say is that I am an optimist. You probably figured that out by now. But I'm a realist too. And I realize that we've gone through a terrible recession, but it's not the first time. California is a very interesting place. Since I've lived here, I've been here off and on since '75, but I've gone through 4 recessions. We had a recession in the '80s around the issues related to the savings and loan, and construction industry collapsed. We lost a lot of jobs. People lost housing. We had a recession in the '90s where the defense industry went down. We had a recession after the dot-com blew up. We lost 200,000 jobs here in Silicon Valley. We just had another recession. And every time people say, well, it's the end. California's finished. We'll never come back. And we do. And how's that possible? It's because of the dynamic of this economy. And it is the fact that there's always new jobs. There's always new industries. There's things happening. This is a really interesting economy. And I've studied it. It's about opportunity. It goes all the way back to the gold rush. Why did people come here in the first place? They were looking for gold. Who made money? Not the people who panned the gold. That didn't last. It was the people who put the blue jeans on these people. Levi Strauss. It was the people who moved the stuff around like Wells Fargo. It was people who handed out shovels like Mr. Stanford. That's what we do. We come up with a new opportunity and we actually figure out how to make money out of it. Nothing wrong with that. We've done that over and over and over again. And as long as we have that optimism, we'll be okay. Now here's the trick. It's not just about entrepreneurship. The other secret to California is that every single time we invested in critical infrastructure, what made us a great state was the railroads. We would not have even been connected to the rest of the country if it hadn't been for the railroads. That was an investment. Abraham Lincoln, good job. If you think about the water systems, we wouldn't have a Central Valley without the water systems. Good job. Well, it started with Earl Warner, went through Pat Brown. We would not have the talent that we have today if it hadn't been for the University of California. That was an investment. That was an infrastructure. So every time that we had to move into a new economic era, we need to have this infrastructure. That's what's missing. We got to invest in that future if we're going to be able to choose it. And I think it's there. We know what it is. It's not a secret. We know it's about education. We know it's about research and development. We know it's about infrastructure, and it's about opportunity for everybody. And if we don't do those things, people are going to fall behind. So I think it's possible to have a great state, but we're going to have to work at it. And that's what the summit's all about.
Well, that was terrific, and you can see from this conversation that why I'm so excited about spending time with Doug, because he's a can-do Californian. So please join me in thanking him.